Hello viewers, we'll be going over the S&P 500. In this video, we'll be going over the day-by-day probability model, technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for the S&P 500. So back to the technical analysis, we're up 17 basis points on the 1-hour chart. We have now approached to positive MACD, and if we zoom out further onto the 4-hour chart, we see the 18 moving average converge onto the 9 moving average, so there's still momentum to the upside. And as for the daily chart, what we have here is we see it converge back in last week, or July 14th, and we also see that convergence with the 9 and 18-day moving averages. And we have not quite reached an attempt to close below the 9-day moving average, this blue line. The furthest attempt was back in July 13th. In order for a trend to reverse, we do need to see candles to close below the 9-day moving average, this blue line. So for resistance, if we were to climb higher, the next possible resistance will be what we made back in June 8th at around a price of $322.82. We're fairly close to that level. And as for support, if we do reverse lower, the next possible support will be where the 18-day moving average resides, and that is around a price of $312.80. And we see past resistance levels that dated back all the way to July 6th. And since we're above resistance, that now act as our support. So if we do manage to head down lower, that price movement to the downside is roughly around 2.3%. And to the upside, that price movement is roughly around 40 basis points. So now let's examine the day-by-day probability model. These models are available in the link below, so do check it out. As we progress to the 5th day, or week of trading, we have a 10% chance for the S&P 500 to climb between 0 to 2%, and to the downside, we have a 60% chance for it to fall between 0 to negative 2.4%. And on the extreme case to the downside, we have a 20% chance to fall between negative 2.4% to negative 4.9%. And on the other hand, to the extreme case to the upside, we have a 10% chance for it to climb between 2.4% to 4.9%. So now let's examine the day-by-day forecast for SPY. So we have 1 day out, that will be a Monday, and 2 days out will be a Tuesday, and so on. So we have 3 days out, 4 days out, 5 days out, and which one of these models we should focus on. Ideally, the model that is best matched to the current trend. The blue line is our current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the line below is the trend that we found on the line graph above. And this trend dates back to June 24th to September 18, 2009. So let's begin comparing both of the trends. So on the current trend, we average above the middle Bollinger Band, and then proceeded to dip below the bottom band, or should say middle Bollinger Band, and then we see another instance right here as well, and then towards the very end we average above the middle Bollinger Band. And now in the trend in question, we average above the middle Bollinger Band, then dip below the middle Bollinger Band, and then once more another attempt below the middle Bollinger Band, and towards the very end we average above the middle Bollinger Band. What we have here is 1, 2, 3, 4 points, and we also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. So the model that we just examined was June 24th to September 18, 2009. Back then, the S&P 500 was down roughly around, say, 2.2%. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 60% chance of falling between 0 to negative 2.4%. So now let's examine closer on the technical performance of each trend. So what we have here on the current trend, we're down 73 basis points from monthly high, up 13% from monthly low, up 1.3% from 10 simple moving average, up 2.7% from 20-day simple moving average, and up 5% from 50-day simple moving average. Compare that to the trend that we just examined. Back then, it was down 56 basis points from monthly high, up 18% from monthly low, up 1.6% from 10 simple moving average, up 3% from 20-day simple moving average, and up 6.7% from 50-day simple moving average. So among the two trends, there are technical similarities. Again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.